We're mortgage brokers, which is a little different. Like, we're not mortgage bankers, so it's not like, let's say, our money. We were some of the first mortgage brokers that came back to the island after Hurricane Maria. And so bringing a bit of a different model, but the idea of having the channel is because when I started working with CoLab, it was kind of like I was getting the same questions again and again on the phone from clients. It's because obviously mortgages have their own layer of complexity, and then Puerto Rico has its own nuances, right? Nuance is like maybe a light word. A single family home with FHA, it's like $477,662, or it's something like very, very precise like that. And then 2, 3, 4 units, I don't remember those specific numbers, but I think it goes up to just under $1 million for a 4 unit. If I'm not wrong, I have to double check.
I had no idea it would go that high.
That's FHA lets you for 4 unit. Yeah,
that's really great. Everybody, welcome back to the channel. I'm Robbie Craig of the Flip Flop Flipper. I am here with Nate. Want to go by Nate the Gringo? I mean,
Gringo Criollo. Yeah.
So
do it. I'm not.
Nate is the guy on the island of Puerto Rico who's getting people loans, and we often are asked questions inside of the comments about how do people fund deals on the island of Puerto Rico. So it's awesome to be able to talk to you, and hopefully you can share some wisdom with the group out here, and maybe drum up some business. So Nate, say hi, introduce yourself, tell us how we get a hold of you, and tell them about your YouTube channel. Guys, go subscribe to his channel because he's got great information.
Thank you, Robbie. My name's Nate Stewart. I'm a mortgage broker with a company called CoLab Lending in Puerto Rico. We actually operate in like 9 or 10 other states plus Puerto Rico, but I personally live and work, and the majority of my business is here on the island. We're mortgage brokers, which is a little different. Like, we're not mortgage bankers, so it's not like, let's say, our money, right, that we're getting lent out. We were some of the first mortgage brokers that came back to the island after Hurricane Maria, and so bringing a bit of a different model. But the idea of having the channel is because when I started working with CoLab, it was kind of like I was getting the same questions again and again on the phone from clients, because obviously mortgages have their own layer of complexity, and then Puerto Rico has its own nuances, right? Nuance is like maybe a light word, but a lot of the same types of loan programs with the same guidelines are available here.
Right.
But like how to get them, the differences of like how, realtors work, or how, contracts tend to be, and all those kinds of things. It was just kind of like, it seemed to make sense. Well, let me put some information out there. So that's why I started the channel, just like, instead of answering the same questions on the phone repeatedly, just like put the information out for folks to find it.
Right.
Right. And so thankfully it's had decent traction. Like, you have way more subscribers, and congrats to you for that. But I consistently, I'll send folks, I subscribe to you.
Thanks.
And so like I'll you'll have like a comment or something. I'm like, that is a really good idea. And I've sent some of your content as well to clients. So it's just, if like, what I'd say is that if you're the out of the box creative financing, get the deal done type guy, I'm definitely more of like the inside the box. Here's like the prepackaged loan programs that also work for folks to buy investments as well, if that's what they need, if that's what meets their needs.
And I think to the extent that people are doing the 1 to 4 family deals, you're way more in the need than what we typically do, right? Like, so anybody who can get a conventional, regular, in the box loan, you should do it, because it's going to be the cheapest money you can get. The out of the box stuff automatically becomes more expensive, right? Like, so that's just the way that it is. The hard money stuff, the investor stuff, the construction loan, all of that stuff is more expensive than what you're offering. And you're a broker, so you get to take your clients to a whole bunch of different sources that can provide them funding, and you can get them the very best deal that there is to be had.
That's exactly right. That's the idea, right? Is that we're trying to, like, when I have a client who has like X scenario for whatever that they're looking to buy, thankfully at the moment, I think we have 4, maybe 5 different wholesale mortgage lenders licensed on the island that we can shop around and look at, okay, what programs in terms, because, well, maybe the federal guidelines are the same behind a lot of the loan programs, but they might have overlays, or they might have these things. But the beauty is that since we're not a bank, just like you said, we can shop it around and take them to, okay, because the number one question everybody asks is, okay, well, what's your rate?
Yeah.
Which is like a great and fair question, and I understand why that's always the one of the first questions. But that's like calling a restaurant and saying, what do you have for me for dinner tonight? And it's like, completely depends. Like, it could be, it depends on your, what do you like? What do you not like? What are your needs? Are you like, same with a loan, same with
how much money you putting down?
Exactly.
What kind of deal are you getting on your property? Is it going to appraise? Is it not going to appraise?
Totally. Totally. And so
Yeah.
like there's the conventional loans that's like very much in the box for those like up to 4 units. And there's like good strategies that folks can use, like house hacking, like you can use a government loan program to buy an investment property so
Right.
long as you're living in one of those units.
And so I'm glad you said that.
Yeah.
We've got two right now, 2 4-family houses that would absolutely work perfectly for that house hack, right? Someone can come and get a conventional loan, live in a portion of the house, rent out the rest of the house, and basically let your tenants pay for it.
that's huge.
I've been wanting to find someone to ask this question, so I'll ask it now. Can the person who's buying that house, because we're going to be selling a couple of them, can they use the income that they're going to get from the rents as part of their qualification?
Yes.
And so the reason that I ask that is then, does that allow someone, like say Don is looking for a house, if he buys a 4-family house, is he now going to qualify for something a little bit higher than what he would otherwise qualify for?
So in the general case, yes, we can
Okay.
use rental income from the subject property as if it's income in your pocket right now.
Okay?
The rub there's two. Kind of depends on the loan program, and I'll set FHA loan program aside because there's like a whole other. We don't have to get into the weeds, but like there's a sticky rule with FHA that folks should be aware of, because FHA is a great program for this kind of thing because it's like only 3.5% down. 3.5% down to go up to 4 units is amazing.
Right.
Like there's no other loan program in Puerto Rico that allows that. Now, conventional in other parts of the U.S., like if we're talking Florida or any other continental part of the states, then they've just made new laws or new rules and guidelines that you can go with only like 5% down, I think up to 4 units. But if it's going to be your primary home, if you're going to actually live in one of those units, we can use rental property income from that subject property and kind of what it looks like. The challenge is that you don't want to overestimate how much income you're going to be getting. That's a very easy mistake for us as a loan officer or the buyer to make, is because if we do some math and we calculate, okay, your estimated payment is going to be this amount.
Right?
And this unit and this unit and this unit, they're going to generate this much income. This is how much we expect. And then an appraiser goes out, and the appraiser says in there, because when you buy a multifamily property, right, one of the things that's on that specific type of appraisal is what's called a rent schedule, where the appraiser has to go and they have to write down like how much do they think fair market rent, how much income, long-term income, not short-term income, only long-term income can it generate. And if our numbers, if we're like threading the needle, if things are really tight and based on our expectation of what it's going to rent
And
for,
they come in low.
and they come in low, your deal's broken.
Right.
Like you just paid for an appraisal and probably title work and all these other things that
But
you're not going to be able to proceed.
What I'm hearing you say is you get to use the expected income, right? So you can buy a fully vacant 4-family house, and as long as you judge what the market rate rents are, and you could do that probably fairly easily by looking at what Section 8 would pay, or just go on Classificados and see what's renting in the area right around that house.
Definitely.
Just be safe, right? Like,
Yeah.
so kind of
Keep it low.
Keep it low.
Yeah,
keep it low.
keep it low.
Yeah. If you
And as a
think
matter
you're
of
going to get
fact-
1,000
Yeah.
and Section 8's only going to pay 750, go with 750.
Yeah, there's actually a website, and I'll send you the link so that we can put it in the description, and I'll put it in my
Yeah,
description.
great.
But there's a link of, I think it's attached to HUD and FHA, that you can go to this link and it'll tell you for any town. I don't think it's municipality, or maybe it's by county. So municipality in Puerto Rico, but it includes Puerto Rico too.
Mm-hmm.
You can go in there and it'll tell you for a single family, double, like duplex, triplex, or fourplex, like how much in that area is the current fair market rental
Right.
that we should expect.
Right.
Now, appraisers don't use that resource, but I've seen it be like really, really much closer than pretty much anything else that
Okay.
like, because usually if you ask the listing agent, they're going to put some number that's kind of be higher.
Yeah.
If you ask,
If you ask the seller, you can't trust that.
no, exactly. But going back to one other quick thing that you mentioned that was really good and important is that it doesn't have to be rented out yet.
That's
for
amazing.
us to be able to use that as
Right.
income. Yeah,
That's
so
amazing.
that's really helpful.
So what that means, and not saying you should do this, but you can qualify your income based on the long-term rents, and you should qualify it based on the long-term rents. And then to the extent that you could rent it nightly on Airbnb after you've closed the loan, nobody's going to come and ask you those questions.
No, exactly. So they don't even care aside from FHA. So like FHA stipulates this as it can't be like when you first move into that property, at least for the first year, it's not intended for short-term rental because
Yeah.
that's considered riskier income. FHA is all about spreading risk around. That's how they can go and get somebody a mortgage for 580 credit, or that's how they can get you only 3.5% down on a 4-unit. It's because the way that they're spreading risk around with mortgage insurance.
Okay.
But if you were to staying with FHA for a sec, if if you're trying to do the same thing, you want to buy, let's say, a 3 or 4 unit property with the FHA loan program because it's 3.5% down. Like,
Yeah.
you can't beat it. Well, there's a little rule called the FHA self-sufficiency test, where for the FHA to continue doing loans for folks that have beat up credit, a little bit risky situations, they want to know, the FHA wants to know that they could, if you default on that loan, they could kick you out, put people in there to rent it, and even if it's only 75% occupied at the fair market rental values of that market,
It's gonna pay.
it'll still pay the full mortgage payment for that loan, principal,
Okay.
interest, taxes, and insurance.
So that's part of the qualification then to get the loan.
Definitely. Well, a good loan officer is going to consider, if you're telling me you want to go buy a property and it's 4 units, $750,000, like big purchase that you want to do with an FHA loan, especially with rates being a little high right now, you have to be very mindful that if it doesn't pass the FHA self-sufficiency rule, you either need to bring a bunch more cash to lower that loan amount,
Yep.
or you need to find a cheaper insurance for the house, or something needs to happen, or lower rate, or something needs to happen to line the numbers up so that it passes that and you can close. Otherwise, you're not closing.
So in Puerto Rico, how high can you go with an FHA loan?
Oh man, that's a really good question. It depends on the number of units, and we can look up the numbers, but they're like weirdly specific numbers. I think for like a single family home with FHA, it's like $477,662, or it's something like
Right.
very, very precise like that. But in general, I'd say, so if it's like 1 unit, it's about, I want to say it's like
$500,000,
470, just under, yeah. And then 2, 3, 4 units. I don't remember those specific numbers, but I think it goes up to just under $1 million for
Wow.
a 4 unit. If I'm not wrong, I have to double check that.
I had no idea it would go that high. That's
FHA lets you go
That's great.
for a 4 unit. Yeah.
That's really great. So recently you put out a video. I didn't see it yet, but I watched a lot of your videos. You were talking about how Act 60 people can get loans. And so I think that's a great topic. I think that fits our audience here quite well. So
Cool.
What did you say in the video? And let's talk just a little bit about that. It's
Yeah.
probably not too dissimilar to what we've been talking about, but
Yeah.
maybe there's some little pointers that you can give.
Yeah, for sure. So again, like I'll come back to that same idea, is that like we're talking about conventional types of loans, like at least the types of loans that our company is able to offer in Puerto Rico in this current like lending environment, which is lenders right now are trying to avoid risk. I mean, they're always trying to, but right now with rates where they're at, that's an indication that they're even less tolerant of risk.
Right.
So we used to have all kinds of like fancy, cool programs that would have been great for Act 60 folks, especially people that have a large amount of assets. Like if there used to be like loans that we had here in Puerto Rico until November of 2022 that was asset based. We just looked at the size of the asset. We did some math to calculate how many monthly payments. Could you make 5 years worth of monthly payments just liquidating that asset? If the answer was yes, you had a loan.
Wow.
It was awesome. It was great.
When's
We
that
ha-
coming back?
Well, exactly. Like, hopefully some of your viewership can maybe like reach out and lean on these, because there are lenders out there that they have these programs in other parts of the states.
Right.
They're licensed here right now. We've originated loans with them in Puerto Rico, but they're waiting. And they're waiting. And like, I call the same lenders every month and say, I continue turning people away because like for Act 60. So to come back to your question, the idea is that it's for a conventional conforming loan, it's all based on qualifying income. You have to have the right amount of qualifying income from the right types of sources that we can accept and put on your mortgage application.
Right.
It doesn't matter how much money you've got in your bank account. It doesn't matter how big your asset is. It doesn't matter like how amazing your credit is. The only thing that matters, not only, but like the most important factor, so long as your credit is decent, is that you need to have qualifying income.
So that might eliminate some people who are here for Act 22 if they're not getting income anywhere else but personal capital gains.
So capital gains is an interesting one, because a lot of folks that live off of their capital gains, what they say is that they're living off capital gains. What's really happening is that they're liquidating pieces of their asset and living off of that,
Right.
which is very similar, yes. But the big difference is that when I look as a loan officer at someone's tax returns and I go to Schedule D, which is where we see capital gains income, if the cost basis has shifted since they bought that, and so they could actually be reporting losses, but they're still liquidating their asset. They're still living high on the hog. They're still living great, but that they are literally have like negative qualifying income. And so
Right.
I have to tell folks, I've had it happen so many times. That's one of the reasons I made that recent video, is because I'm having the same conversations with folks that keep running in and getting stuck on the same thing. And if they would have just known like a year or two ago how to kind of structure things or what to tell their tax preparer, then maybe a lot of these things could be
So
avoided.
maybe pay yourself a salary that's reasonable. Maybe
So that's
do this
helpful.
in advance a year or two before you're going to come and
Yes.
try and get the loan.
Or probably the best vehicle or like strategy that I've identified to help folks get around that specific issue where they have, so say for example, lots of X60 folks have large amounts of assets that in cryptocurrency. Okay, cryptocurrency and conventional mortgages like do not
don't
fit
fit.
together. They don't fit together.
Square hole with the round peg or
Yeah,
something.
all
right?
that. That just doesn't work. And so like to get around that, one successful strategy that we've seen and that we have, this is kind of like threading the needle, but it can work for some folks, is that if they create a trust, they liquidate a large amount of that asset. Like it can't be in crypto anymore, unfortunately. So you have to, even though crypto's doing great at the moment of recording, like you have to liquidate a fair chunk of that. Then you would set that in some other asset type, right? That's not cryptocurrency.
Right.
That you can liquidate pieces of it and pay yourself a regular, like flat amount every single month.
Got it.
If you can do that, and if you're also the person who created the trust, then you have to do it for a year. And then we can use that as qualifying income. If someone,
so a lot of this is planning. You have to plan
massively.
well ahead of time.
Yeah, I think
Yeah.
so. And I think that's why it's so good to have like these kinds of channels and this kind of content is because some folks, it's like, okay, I'm in Puerto Rico. I'm here for X60. Help me. It's
Give
like,
me a loan.
Okay, well, and then I see their documents. I'm like, oh man. The other big issue that I see with X60 is not Chapter 2, the folks coming for like individual investors. It's the folks coming for
Export
the
services?
export services. Thank you. So the folks coming to start a business
Yeah.
here. Well, what they'll do is they'll have a very successful business going in the States. They'll end it, and then they'll start the new entity in Puerto Rico.
Right.
And if they're paying themselves what would be qualifying income from that entity, from that company that they just ended, we can't use income
use it.
from a brand new business.
Right.
We can only use income for a qualifying mortgage, for a qualifying income for a conventional mortgage. We can only use income from a business that's at least 2 years old. If you were paying yourself, this business is doing great, and you end it to start the new one, and then you start paying yourself from that one, doing the exact same thing. It can be the exact same stuff that you're doing. Same people, same team, all this changes the structure. You've just reset the clock. Now you have to wait 2 years.
How does that coincide with the obligation of some of these people to buy a property inside of, I think, 2 years from the time that they get their decree, right?
Precisely. So like a lot of folks get stuck. A lot of folks make that mistake. Like don't end that company, continue paying yourself through that, start the other one. The structure, how they do that is outside of my expertise, right? I would tell people to talk to like a business planner or like a tax preparer or somebody. I know a good tax preparer who could potentially help with that kind of thing.
I might be able to give you a solution for anyone who's falling into that. Not
Okay.
going to get them their dream home, but people are going to get jammed up. We've always got some things that are out here, and we could do something creative for them to meet their qualification of having bought something while they then get qualified to buy that dream home. So send people my way, or
All right.
at least give me
No,
a
I
call
mean,
when
like,
you have people
yeah,
that
some
are jammed up and up
reciprocity.
against, like I know every June there are people that are like, I need to close next week.
Yeah. Yeah. Well, exactly. And it's like, had they just known, before doing that, because, definitely it's a benefit that a lot of folks are seeking, but how they do it, like definitely have that financial plan, like knowing the guidelines or talking to somebody who can advise on those things is key, because
Yeah.
so many people, they had a source of qualifying income, then they ended it and now they're stuck.
Right.
And then they're like, so what they can do then is, okay, well, buy it cash. And then hopefully in a little bit, you can get your cash back out by doing some delayed financing.
And I think maybe what we were talking about earlier, they can grab some qualified income by doing the house hack. So rather than looking at a single family house where there's not going to be any extra income, look at a 4-family house where there is going to be some extra income and help to qualify.
Now, that's true. I haven't yet to see, though, a scenario for like a conventional conforming loan that works like a DSCR, right? Like I haven't ever seen anyone with no qualifying income of their own
Oh, just take
be able
only
to
the income.
just
from,
use only the qualifying income.
Yeah.
Because the numbers, I mean, you'd have to be getting that property for an absolute steal. And it generates a ton of long-term monthly income. Like that's the only way that I could see those numbers working out, especially in the current environment where
because
rates are.
the ratio is supposed to be like 35% of whatever their monthly income is, or something like that they're going to qualify for.
So we can, depending on the loan program, but in general, right, if we're talking about house hacking for your primary home, just regular conforming, like conventional loan, not a government loan program, we can only maximum, we can take 50% of your gross income and use that towards all of your debts, not just your mortgage payment,
Not just
but
mortgage.
the sum of all the minimum monthly payments of all of the trade lines you have reporting.
It's
on credit.
amazing. They must think that these people have to eat or something and need that
If
money
only.
to live on, right?
Yeah.
I don't
Sorry,
know.
we can't use all your income for just the loan.
Just the
we
loan.
assume you also have to
Yeah,
eat.
maybe have a
and
car, maybe
a
pay
phone,
that credit card
maybe
and a phone.
Yeah. Or a bike to get around, something.
And,
yeah.
and banks aren't dumb, right? Like, so we were talking about before we jumped on air, the default rate and where we're at, and kind of this market of risk. And I don't know, but I believe, and I think you looked it up, it seems like in Puerto Rico it's a little bit more risky than in the States. You were saying what it looked like.
We
for
looked
the
at some
default
numbers.
rate.
I don't know if they were like clear enough numbers to like report them here on as we're rolling. But yes, Puerto Rico, without a doubt, is considered a higher risk lending environment from the perspective of lenders, right? And that is more to do with hurricanes, earthquakes, and then like weak power grid. Because what happens is that when a big storm comes through, or if there's just a lot of outages or whatever happens, when your power goes out, people get pissed off and they're less likely to pay their loan. It's just, that's what the data shows, right? Is that like, if people don't have lights and water, they're like, well, heck with everybody, heck with the institution, like I'm not making my payments.
And I guess they leave too, right? Like they're like, I'm just out of here.
Imagine
and then once
so.
you've left, you're not going to pay for that loan. I think that has happened.
for sure.
We saw that back in the crash where people were just abandoning ship. They're like, I'm out. And once they've left, then they're definitely not making a payment.
Yeah. But I would say that like right now in Puerto Rico, even though it's considered from the lenders a risky like lending environment, that with rates being higher, like a lot of people, they're like, oh, well, I want to wait till the rate comes down. And I don't want to sound like I'm putting lipstick on a pig, but I tell folks like, look, Puerto Rico, yes, it's higher risk lending environment for the lenders, but for folks like us, the buyers, it's a very competitive market typically, and it's on an upswing. Like we see new construction happening. Like we see like the economy is like coming along. Oh, finally, it's doing really well.
Absolutely.
Right? And that like there's a bunch of people sitting on the sideline waiting for rates to come down. So like, don't wait. If you can find the property and if you can find a payment, however you're going to structure that money, but if it's a conventional loan, great. But if you can find a payment that makes sense and that you're still getting your return on your investment, well then don't wait. And then you'll refi it later and be doing even better.
And I would think, especially if you're going to live in it, right? Like, so if you're going to live somewhere and you can just live there for 10 years, it's a golden ticket, right? Like it's going to go up in value over a decade. And this is like forced savings. This is how people gain wealth. So I agree with you, Nate. Don't wait. And I hear it all the time. And I think it's important for people who are real estate investors or who are thinking of being real estate investors and thinking they're going to wait for this massive correction. It's very likely not going to come, at least not the way that you're expecting it.
No,
it's not happening like 2008.
Like
at least there's no indication of that I can tell.
Like,
so buy the best deal you can buy and hold on for 5-10 years and you've hit a grand slam.
Yeah, I'd agree. I mean, like, we were getting a lot of news reports at the end of last year when rates like kind of peaked in like December time. They kind of peaked and then they started coming back down nicely. And then all these news reports came out being like, rates are getting ready to fall off the table. Get ready, everybody. And we're all like,
Yay.
okay, cool. Because everybody,
Never
wants it to be cheaper to borrow the money, of course. But inflation hasn't abated as much as folks were hoping, at least the Fed. And so like rates have continued. They've come down, but then they've still kind of like plateaued.
We were supposed to get 7 rate cuts this year or something, and now we're hoping to get 2 or 3 or something like that.
We're hoping.
And it's
Yeah.
very, very unpredictable.
No, it is. But
so far, they've just kind of held steady. At least they haven't gone back up, or they haven't raised the rate again.
But thankfully, like, one big thing that I think folks should know too is that if you just call a loan officer and ask what are rates, well, I'll just pick a number out of a hat and give you a number. But what's the rate that you're going to get me at closing is the better question to ask, because if we're talking about someone buying their second home, like an investment home in Puerto Rico or an investment property in Puerto Rico, they're not going to be living in it full time.
Yeah.
Those rates are much different. Those rates right now we're seeing mid to high 7s, depending on credit and other factors.
And how about primary residence?
Primary residence, it's a bigger landscape because we have government loan programs that we can draw from. We have USDA, we have that here in Puerto Rico.
Yep.
FHA, we have that here in Puerto Rico. And the conventional conforming. So like if we're talking FHA government loan programs like USDA, VA, or FHA, right now those rates, all other things being equal, like depending on how closing costs get structured, whatever, the lowest rates that I'm seeing right now are in like high 5s, low 6s.
That's a tremendous rate.
It's not
That's
that bad.
really good.
Not that bad.
Well, I've been in this a long time.
Yes.
So I just come from this idea back in the mid 90s where 8% was good. So
Exactly.
I've kind of always had that in mind. I don't borrow a lot of money though, so
Well, but it's good that you mentioned that because like the rates, I think it was in the 80s, were topped out at like 17%.
Oh my God.
It was insane.
The early 80s,
17%.
17, 18% for a conventional
Yeah.
craziness.
And like if someone, okay, maybe not at 17%, granted, but like I saw it was like a loan officer meme or whatever, but it said something like if in 1985 you decided to wait for rates to come down, you would have had to wait like 25 years. And so like how much is 25 years worth of paying rent?
Yeah. What's that worth?
Exactly.
Yeah.
How much is that worth?
How much appreciation did you lose? How much? Yeah, that's
Exactly.
for sure. So, real quick, if you can, because we are real estate investors on this channel. So, are there any real estate investor type loans? And I hear you talking about investment properties, but I'm thinking more of established cash flowing type properties, even if they're single family or small multifamilies. But definitely, I would think, is there anything above the 5 units, 6, 7, 8, 9, 10, 11, 12? Is there anything available? Or are we just out of luck?
No, I mean, like, I imagine that there are. Again, like, our company, like, we're focused on the residential side of things, which goes up to 4 units. Anything beyond that is going to be considered commercial, and you're going to be looking for a commercial type of loan. There was a time, and we're hopeful that it'll be back again soon, where we have lending partners that help us fund loans here where they make exceptions for those kinds of things. Because we had DSCR here in Puerto Rico.
For a week or two, right?
Seemingly, right? Now it's how it feels. It was, I think it was like 6-8 months, something like that. It was wildly popular, right?
Yeah.
We helped a lot of folks with that one. But those rates, like if you're rate sensitive, definitely DSCR would not be for you. Like at that time, this is in November 2022, we were seeing rates in the tens for DSCR here in Puerto Rico. But it was still, so long as the numbers were making sense, people were still getting that to happen. So like right now, and those types of, what I wanted to say is that those lending partners, they were willing to make exceptions. They would say, well, oh, it's 5 units? Okay, we'll do it. Oh, 6? Okay, well, they would hit you on the rate a little bit, or something like that, and then, but they would do the deal.
How about earlier you talked about like an asset-based loan? Anything like that exist?
At this moment,
on the horizon?
On the horizon, I think so, because like, if I just go based on, right, because like as I'm a broker and I operate in a couple other parts of the U.S., I'm linked to a lot of these lenders and I get their marketing. Right now, the marketing for what we call non-QM, so like non-qualified mortgages, these mortgages that are like outside the box, their marketing is going wild right now. Like every other email I get from a lender is like DSCR, asset-based, profit and loss letter loans. Like, so like right now in the continental U.S., this is like huge. Like they're marketing and pushing a lot. So we're very hopeful. We have a lender right now that they're working through their last bits of paperwork to be able to do these kinds of loans here again. But to answer the question, like clearly, no, we don't
Not
have
right
like
now.
we don't have DSCR, we don't have asset-based, we don't have bank statements at this moment. Those
Bank
we
statements,
did.
that's a good one.
Oh, that was so.
That was great.
Phenomenal one.
Well, that's probably why we had those crashes back in 2008.
Well-
they would lend my dog. You know, he had a good bank statement. They'd lend him
That was like
$500,000.
craziness, right?
Yeah,
like
it was
was
nuts.
like not just stated income. What got
Stated.
everybody in problems was like the stated income.
Yeah.
It's like if you're just going to tell them how much you're making and no one's going to check, well, we
right.
see what happened. So that definitely. But now it's like bank statements. Well, eventually, like once that comes back to Puerto Rico, and our company at least, we're actively working on that. Like we've got, I think, 2 different lending partners that their licensing is done. We just need them to say, yes, we'll do it again, right? And they're just waiting for the data to look right, or the secondary market to thresholds to change, or things that are above my pay grade. But
sure.
But I think it's close though. I think that the things are close. As soon as we have them, I'll let you know.
All right. Well, cool. I look forward to that. And so I'd like to ask your opinion of how do you see the economy and the trajectory of things going on the island of Puerto Rico? I have my thoughts on it.
I mean, I'd say I definitely see that at least the economy in Puerto Rico, I feel like is on the upswing. Now I've only been living here full time for 3 years, and so I think you've been here
Almost
longer
7.
than me.
We're coming up on 7 years.
Cool.
Yeah.
So you've seen more than me. My wife's family is from here originally. Like the whole family's here. So like I've been with her for going on 18 years, and so like. So I've heard of how, and I get to draw from them of like how they see the island. Definitely on the upswing. We definitely see that. One indicator that I look at is like how many cranes. Like if I'm driving into a city, like I look at how many cranes are on the skyline.
We do the same thing, and
Yeah?
I mention it on the channel kind of often.
Really?
It's a big indicator for how well something is doing. So
Right? I mean, like-
when we came to the island, there was one on the entire island.
Really?
One. and I don't think it was in service or being used. And now you drive around and look. I mean, just where we are here, I think there's 10.
I think you're right.
Within a quarter of a mile.
Yeah, and to me, that's a great sign that like, so then the new inventory will be coming.
Yeah.
Right. I think we can say, but like economically speaking, I think that things are definitely on the upswing. Kind of interestingly, like the vast majority of my clients are Puerto Rican folks, but those that have either were born here and moved away, or are like, you know, of Puerto Rican descent and like live outside, but they want to come back.
Right.
Like that is the vast majority of the folks that I talk to. Like if you were to look at the last names of my client list, it's like they want to come back to Puerto Rico. They want to invest in their, you know, in their home island there, and it's, which is really cool. And I think that thankfully like the things are on the upswing, and I just hope that it continues.
I would say that I mirror that, right? Like, so our business for the entire time that I've been here, when we are selling things, it's almost exclusively to the local population. Like
Awesome.
the amount of times that I'm selling to people who are coming from the states that don't have ties to the island, I probably can count on one hand in lots and lots of deals. So
I'll tell people too, like, because I'll get calls from folks that they'll be like, you know, I've read about Puerto Rico. I think I want to buy. And I'm like, cool, come here and let's have a meeting and like get here. And then I'll be happy to help you. I mean, I help them. I'll answer questions. If they really want to do an application, sure.
yeah.
But like, you got to come here. You got to see what it's about. I had a guy tell me literally where he lives is Detroit, and that he's been reading a lot about Puerto Rico, and it seems a lot like Detroit. And so he doesn't need to come down. He knows that it's like Detroit. And I was like, my man, you should really come down here, because there's probably going to at least be a different accent than what you hear in Detroit. You know what I mean? Like, it's like, you know, some folks, you know, they just, you know, you talk to all kinds of folks.
Yeah, that's, of course. Yeah. So I don't know if we missed anything, but if you've got something that you want to add to this, we'll let you end it on a positive note.
Cool.
And at least tell everyone again how they can get a hold of you, how they can get a loan through you.
Sure.
And yeah.
I do, but mine is a personal question, because I'm a loan officer who's in the market as a buyer, like looking for my own home. We've been looking for a while, right, my wife and I, and we just found a property where it's just like every other darn listing is not subject to appraisal. They want what they want for it. Yeah, you can bring your financing, they tell me, but like, here's how much
You're
I want.
paying the
for it.
difference.
Yeah, it is not a hardcore fixer-upper, right? But it definitely, by our estimate, would probably need about 20 grand.
Okay.
And if you could settle a debate for me and my wife, because we were talking about like one line of thinking is like to pay more than something's worth and then have to pay to fix it up makes no sense. Versus if you know, think about how much it would cost you to get into a property, if that number is worthwhile for that property in your head, can you live with yourself? Would that be okay? But from an investment perspective, like trying to take the emotions out of it, because it's like if it's your primary home, even me as a loan officer, I'm like, you get hung up. Like it's just the nature of the thing. But like, what would be kind of your guidance for like that kind of scenario where the seller's asking over appraised value and it needs work?
And it needs work.
What's your thought there?
I have a specific thought on this, and I'm going through the same thing. Okay. So I look at everything as an investment, and I have a really hard time justifying it in my mind. But here's how I will get there. Okay. Never bought a house that I lived in that my wife didn't rip apart and redo it. And it would be, we buy really nice houses. They look phenomenal. I could move in them tomorrow. And she comes in and says, nope, I don't like that. I don't like that. It needs a new kitchen, and we're going to redo all of the bathrooms. Right. Okay, well, that's $100 grand. Right. So I think if you're buying something that you think that you can live in for a long time, if it's sort of, I don't want to say your dream forever home, but if it's a home that you could see yourself being in for a long enough period of time, 5 years at least probably, you probably don't have much risk, right?
Okay.
If you are buying it, even though they're asking for more than it's worth needing the work, if you're buying it for less than it's going to be worth after the work, you absolutely have no problem.
Sure. Okay.
I don't know if that helps you, because I don't know which side you're on.
No, it does.
But for me, it helped me, because eventually I just, after doing it a few times and knowing, literally, like we were looking at a house last week, and my wife told my contractor as we were driving up to this house, it doesn't need anything. And I said, Lewis, she's full of shit. As soon as we get into this thing, she's going to tell you.
Right.
We weren't there 5 minutes, and she starts telling me, he goes, yeah, it needs some work, doesn't it?
Well,
and the house was beautiful.
Yeah, I mean, to her credit, what she told me about she's on the side of like paying more than something's worth and then having to go pay and fix more stuff is like, what other thing would you buy like that? Like, you're not going to buy a car.
Yeah.
Just, you know, this car's for $10,000, but for you, sir, it's 15, and then you're going to have to fix it. It's like, that, for any other scenario, And when she broke it down to me like that, I was a little pissed because I was like, damn it, I'm a loan officer. Like I should, like I work in real estate, but the emotional side of it, of like thinking about a home, seeing my kids and my family like in this home, is very
There's
compelling.
value in that though too.
That's the side
lots
of
of value in it.
yeah, and that's the side that I was kind of coming down on, was like the value of that. And like numbers in the computer and numbers in the bank account are going to change, but like what's the value that we're going to get out of living it? That was kind of like the perspective I was coming at it. But what you've said, I think does help.
I'll tell you what. This back to my scenario. I'm looking at this house with my wife, and it's way more expensive than what we had allocated that we were going to spend.
Oh, really?
And she leaves the house and says, and this is what gets me, I could see myself being happy there. Oh, well, now we got that
get the
house.
checkbook
There's
out.
There's
Yeah.
nothing that can be done.
Hold on, do they take checks? Yeah, so,
Yeah.
Yeah,
So
you gotta do what
and
you
I
gotta
don't know
do.
if she knew that, but I was like, okay, well, I'm ready to
Right.
freaking move heaven and earth. We're gonna
Whatever
we're
it
gonna
takes.
try.
I
Thank
mean-
God our offer got turned down.
Oh no, yeah, no, it's like that, because here what I see a lot of is that they're not subject to appraisal. That a lot of folks are having to come in and go over what it's appraising at.
Yeah.
And that's why like my next video, I'm gonna interview an appraiser, because I have like a bone to pick necessarily, maybe I do, but that I really. Like I have a lot of specific questions that I want to ask appraisers, because probably one of the best things that appraisers help a real estate market with is keeping the property values like reasonable. Otherwise, sellers are just going to ask for $1 million for their little bungalow, and then
they
now
do.
nobody can afford to buy anything, and people are homeless. Like
Yeah.
that's what they're helping tamp
Are
down.
you
So
doing a lot of loans where appraisals don't matter and people are just writing a check for the difference, or?
I wouldn't say a lot, but I would say probably the majority of loans, people are having to pay a little bit over what it's appraising at.
And so if you compare that to the States, does that ever happen in the States?
Rare.
Yeah.
Rare. It's subject to appraisal.
Yeah.
I mean, yeah, it's very, very rare. Unless it's some like kind of amazing opportunity property. It's like had a famous owner or some weird thing like that. That's really more the only time that we'll see things like that happen. But here in Puerto Rico, no, it's much
Really
more common. Really common.
Really
Not
common.
subject to appraisal, and you're gonna have to pay over what it appraises at,
Yeah.
which is not ideal, but maybe, I don't know, maybe you can come up with we can start our own lending. It's like, and we can give people that appraisal gap difference. But
Well, they used to be able to do it. You could do what's called a second mortgage, and they
Yeah.
do 80-20 loans or 80-10-10, and that sort of went away. So if that ever comes back,
it's back a bit.
back.
It's back a bit. So there's like a wraparound second or something, like I forget the specific term, but like we have a lending partner here on the island that will do. It's like they what they call it and how they structure it is it's like a down payment assistance program.
Okay.
And it's only for your primary home. And that if you need help, well, that's cool. They will let you borrow that additional amount for the down payment.
from the seller?
No,
Or
from them.
anybody?
From them.
From them.
From the same lender.
Oh, okay.
And it's treated as if it's like kind of like a second mortgage. Even though like
Yeah.
things like HELOCs are not they're not a thing in Puerto Rico. Like
Yeah.
I guess they're not legal. There's no HELOCs here.
Really?
No.
So no equity line of credit?
Currently no.
Oh,
Currently no.
interesting.
Yeah. But that's a really good strategy too. Is if folks have equity in a home in the continental US, they can take that equity out in terms of a HELOC, and then that's money you can use. Like that doesn't have to be seasoned. You just show the documentation for, look, so long as your debt to income ratio, like the numbers work with that extra payment
Right.
of an extra loan, you're good. You can use those funds. It's
Amazing.
like borrowing more money to make it happen yourself. Like,
Yeah.
So that's definitely a thing.
That's awesome.
Yeah, man.
Well, listen, I could do this all night.
I know.
I think this
got
is
me
a
going,
great
yeah.
conversation, and we can keep going, but we can also do this again.
Yes.
And have another one. So, guys, I hope you're liking this. Please give us that like, and reach out to Nate at.
Yeah, you can find me on YouTube. The name of my channel is the @ Gringo Criollo. So it's like looks like in English Gringo Criollo, and or you can Google me at Collab Lending. You can find me there, and yeah, all my stuff is pretty much out there, so shouldn't be too hard to find me.
Yeah, and we can make this a regular thing where we
Yeah, man.
come in and sit down and talk about what's going on in the loan market, what's going on in the real
Absolutely.
estate market in general. I'm up for it. It was a great conversation.
Thank
Thanks
you,
very
Robbie.
much.
No,
Appreciate it.
the invitation.
All right, guys, give the video a like, subscribe to the channel, check out the next one here. God bless.